Yes, indeed. We are live.
Yay!
Well, good evening, everyone. It is LaRonda.Scott with eXp Realty coming to you with another Thriving Together. And this evening, I am excited to have with me my fellow Tri-Board member, friend in the industry, Miss Shondra Tanner. Shondra, I'm going to give you an opportunity to introduce yourself to everyone.
Okay, thanks, LaRonda, for having me. Thank you for the invite, and I look forward to talking to folks and sharing information. My name is Shondra Tanner. I am the director of Mortgage Origination for Self Help Credit Union. We are a full service credit union that is based in Durham with locations throughout North Carolina, South Carolina, Florida, soon to be Atlanta, and Richmond, Virginia. What I do at Self Help is I manage the origination side of things. We help people buy homes, um, and we do so using some of our creative programs. I've been at Self Help for 24 years in September.
24.
24
Oh,
years. I started when I was like 5.
that's what I
Um,
was gonna say. That was like before in elementary school, no more than middle school. Goodness.
yeah. But 24 years in September, and I truly love what we do and helping others.
So that speaks a lot. When anyone is anywhere for that long, it speaks, loudly about the organization, the company. So, out of all of the mortgage companies that are out there, what spoke to you about self help and what keeps you there so long?
Well, great question. So I started my banking career fresh out of college at UNC Wilmington with Wachovia Bank. They're no longer
Hmm.
Wachovia Bank. Started there and then did a little bit of mortgage lending through the Affordable Housing Mortgage Loan Officer role.
Hmm.
Um, while I was at Wachovia, we had great CRA type programs, but I just didn't feel like we were working with the market that I wanted to work with, folks, with credit challenges, low income families,
Hmm.
minorities, those sorts of folks. And so whenever I found out about self help in 2000 through a friend, I was just really amazed at all the work that they do. And I joined them and have been with them for 24 years now. I stay there because I think that we do good work. Our mission is to help low to moderate income families, minorities, folks in rural households, rural areas. And so, we really do focus on the community. And that's what I love about self help.
And I'll be honest, that's what excited me about having you on. I think I told you this is the first real conversation that I'm having about home ownership and looking at really answering some unasked questions. Is that a thing that people may have? Because sometimes people desire to do something, but they have all these thoughts and things that they've heard from other people, so they don't ask questions. So I'm going to try my best to talk with you, chat with you about some of the things that I've heard and I've known from just events, gatherings, and things that I've been with. But again, speaks volumes that you've been there for 24 years. But one of the things that you said in another space we were together in is that you self help is just unique in
Yep.
the way in which you go about your lending and how you support people. How would you describe that?
So I would describe self help as a type of organization that's really looking to help the people that can't get the traditional type financing, whether it's car loans, mortgage loans, business loans, establishing credit. There's a lot of great banks in our communities. There's a lot of great mortgage lenders, and there's all sorts of programs available. What we're trying to do is trying to reach those folks that have been shut out or may have a more difficult time qualifying
Hmm.
for traditional type products. And so that's where self help listens. We create products, we try to create products that's going to
Hmm.
appeal to those that are less or underserved.
Okay.
So we try to come up, one of the biggest challenges with purchasing a home is um, folks coming up with the down payment amount, right? So coming up with
Mhm.
cash to close. A lot of families can afford to make that mortgage payment, but when it comes to, coming up with down payment, paying for fees and things like that, there's a challenge. So what we
Right.
try to do is figure out what the problem is, and then we try to address it. So that's one thing that I really do like about self-help.
I love it. So it makes sense that I met you at Tribor,
That's right.
because, Tribor, our mission, our passion is closing the gap when it comes to homeownership, creating democracy in housing. And that is exactly what they're giving you the opportunity to do, and do something that you are passionate about.
That's right. I mean, there, like I said, there's so many wonderful lenders, and we are not here to compete with all
Mhm.
the wonderful lenders. We're trying to just, help families build that generational wealth, whether it's one family, 10 families, or 20 families. It
Mhm.
doesn't matter. Our goal is to see people get into home ownership. And if that means that they come through self-help, that's great. If they go through another lender, that's awesome as well. We just want to see people, get ahead in life,
Right.
obtain that goal of home ownership.
Now you used an acronym earlier, and I'm trying to make sure this is for the people. So we don't
Yeah.
do anything that's 201. We're keeping it at 101. You said CRA. Break that down. What CRA?
Community Reinvestment.
There you
Community
go.
Reinvestment Act is basically where banks have to do a certain number of low to moderate income type financing. So, banks are looking to create programs that are going to appeal to the lower income families, low to moderate income families.
Mhm.
So all banks are looking to do that type of work.
Okay.
Yeah.
So let's talk about it.
Okay.
People trying to qualify for a loan. I want to stop renting, but I'm not sure if I'm home buyer ready. Should
Yeah.
I figure it out on my own? Try to do some work? Come and talk to you?
Well,
What do you recommend my first steps?
I would start by looking to see what information is out there and ask questions. A lot of folks come to us and they are fearful of having, you know, life happen. And so their credit
Mhm.
may not be the greatest. Um, their income may not be as high. A lot of folks don't think they can afford to buy a home. But in
Mhm.
reality, they can afford to pay rent, right? So
Right.
it seems like that they should have enough income to buy a home. So I think starting with a lender with self help would be awesome. Come to us. I advise that, folks start early in the process because sometimes there are credit challenges that you need to work on to prepare.
Mhm.
But you come, you talk to a lender, let them pull your credit, see what's there because, credit tells us your financial history, how you handle
Mhm.
your bills every month.
Right.
Do you pay your car on time? We do a rental verification to see how you pay your rent. So starting to get pre-qualified, I would say, is the first thing that you should do. I'm sure if people come to you and they say, LaRonda, I'm ready to buy a house, the first thing you're going to do is say, what?
Have you been pre-approved?
Exactly. Have you talked to a lender? So go ahead and
Right.
make that first step. Talk to a
Mhm.
lender. You have to have money in your wallet before you go shopping. And
Right.
so starting with the lender, it tells you how much you qualify for, how much money you're going to need to come up with. It's going to tell you what your estimated payment is going to be.
Mhm.
So all of those things you need to get taken care of at the beginning of your home buying process.
So if I'm credit challenged, like how challenged can I be to not qualify or not even begin the conversation? What does that
Yeah.
look like? Let's go ahead
So
and say that word,
so
score.
credit score. Oh my God, that's what a lender looks at to determine your credit history, I guess, your credit history. Yeah.
Mhm.
So our self-help, we work with people with credit scores as low as 580.
Okay.
So we're used to seeing folks that have had credit challenges in the past. Some go through credit challenges and they don't reestablish credit on the credit report, but they pay their
Mhm.
utilities. So, how do they pay their electric? How do they pay their telephone? How do they pay their water? How do they pay their car insurance? We can use those things as credit history. It's called alternative credit or non traditional credit.
Mm.
Um, there are programs out there, various lenders. Some lenders may require 620, some may require 640. My advice would be to go ahead and start somewhere, find out what your credit is. If you've had any, collections or late payments, you need to know. You need to know what's on your credit report so that you can start working on those things and getting ready to buy a home.
Okay, I like that. So as low as a 580, that word is like,
Yes.
580. But I thought it was really cool, like that you said using non-traditional things in terms of the power bill and the way in which they paid other bills.
Yeah.
And there's something else recently I heard, and I hate to jump ahead, but I've got to say things when I think about it. I need to start writing my
Me too.
thoughts
Me
down.
too.
I heard something about your college transcript
Yeah.
translating into 2 years of work
Of
history.
work history. Yeah. Yeah. So if you are in school, and so we have to verify employment, first of all. So
Right.
lenders want to see that you have long-term employment or
Mhm.
stable employment, right? So normally we verify like a 2-year work history.
Okay.
For college students, they may not have that work history, right? But
Right.
if for some reason they graduate, and I'll just use maybe like a nurse or a teacher as an example. If you go to college and you get your nursing degree and you come out of school and you start working at, let's say UNC, because I'm a UNC fan, UNC hospitals, then that school history can translate or can make up that gap for the work history, right?
Okay.
Same thing with the teacher. If you graduate with your teaching degree and you go to work for Wake County schools, um, that work the college history counts as work history, and
Okay.
that should be across the board. I think all lenders will allow that to be included.
Now this is a funny, but I got to ask the question. Okay, now you can use your tuition for
Uh-huh.
2 years of work history. If I've gone to nursing school and I'm now employed, and I
Yep.
go to work there, but is there an expiration date on that to where I come out and then I wait a little while and then I go to work? Is there an expiration in there with that
So
gap? Have you
I
ever
don't
seen that?
I don't think there's like a gap per se that we're
Okay.
looking at. So what we'd like to see is that you come out of school, you enter the job market, you're looking for a
Mhm.
position, you find a position, and then you're there 90 days, and then at that
Mhm.
point we can then move forward because you have to have some time on the job.
Right.
It's a little bit easier when you have someone that is salaried
Mhm.
versus hourly.
Yeah.
Because that salary is pretty much guaranteed, right? So we can use that
Mhm.
salary. So in the terms of a teacher working 10 months, they get paid 10 months out of the 12 months, we can use that salary.
Mhm.
So that would be the only thing. I think it would be a little bit harder, like if you're coming out and you are perhaps an hourly employee. Um, I guess it just depends on the situation, where
Okay.
what your degree is in, and then where you find your job.
Because what I was thinking about is coming out with that degree, and if it takes them some time to find a role directly connected with whatever that degree is,
Yeah,
but then they finally do, are they able to reflect back on that? But I guess again, that's a conversation to have with a lender. You never know until you ask the question and
that's
looking at your
exactly right.
full profile.
That's exactly right. The other things that we'll look at during that time is, what is your credit like during that time,
Mhm.
during that transition from, college to work. Um,
Mhm.
did you, pay your bills on time? Were you continuing to save money? Were you paying your
Mhm.
rent on time? How much money do you have in savings, right?
Right.
Those all of those things kind of fall within determining if, an exception. Sometimes lenders can make exceptions.
Mhm.
You just never know. You just have to ask the question and present your information, your case, and let us
Okay.
decide. Yeah.
And with credit score, there's credit monitoring things out there, but what you see in some of these apps is different than what you guys pull. How do you explain that?
Yeah, a lot of times people, when we first start the conversation, we'll ask people, "Well, what's your credit like?" And they'll say, "Oh, I got a 720 with Credit Karma." And then when we
Mhm.
pull the mortgage credit report, it's
Mhm.
not the 720, it's usually much lower.
Mhm.
We're pulling a tri-merge credit report, which is being pulled from, it's a mortgage credit report, which is being pulled through TransUnion, Experian, and Equifax. And a
Okay.
lot of times, I don't know the ins and outs of how they come up with the scores with those credit agencies, but a lot of times the scores do fluctuate, and sometimes it can be by a big number. So I
Mhm.
always encourage people to go ahead and get with the lender and to see that mortgage credit report, to see what that lender is looking
Right.
at.
Verify. So you verify, so you're looking at credit score, you verify employment.
Mhm.
If I'm coming to you or I'm going online and I decide I'm going to apply, let me see what my budget is. What are some other things that you're asking for? How do I get ready for that process?
So, one of the things your lender is going to ask you for are your bank statements. And I have to tell you, LaRonda, bank statements tells us so much about
People.
people and their financial situation. Um,
Mhm.
and when we get the bank statements, we're going to look at the bank statements. And if for
Right.
some reason, we're seeing you're spending a lot of money, maybe if you don't have a whole lot of savings, we're going to look at those statements and say, okay, well, I see that you eat out quite a bit. Is there a
Mhm.
way that maybe you can cut back, maybe start cooking at home? Um, maybe you're, getting, people spend money on a lot of things without actually being aware of what they're spending on. Like,
Oh, yeah.
even whenever I look at my bank statements, I can see we eat out a lot. I can see, just, oh, I need to cut back here. I didn't realize I spent this much money in this place. So when I get
Mhm.
my hair done, when I get my nails done, I'm like, oh, I don't want my husband to see any of that. Uh,
Amen to that.
yeah, but when you actually sit down and look at bank statements, and when you have the customer sit down with you and look at the bank statements, it's like, wow, I did not realize I was spending that much money in eating out each
Mhm.
week, for lunch, going by to get coffee every morning. All of that stuff adds,
The coffee?
all of that stuff adds up. It really
Ah,
does.
and you feel
It,
like you're not spending a lot of money, but like you said, the just a little bit just eats away and it adds up over the course of a year.
that's exactly right. So what we do, so we have financial coaches on staff at
Mhm.
Self Help Credit Union. So this is another service
Mm,
that we provide free of
okay.
charge. If you come to self help and you need help with budgeting, if you need help with credit issues, developing a budget, developing a savings pattern, we help you with that free of charge.
I
So
love
our
that.
financial
Okay.
counselors will sit down with you, create a budget. If there's things that you need to pay off on the credit report, we work out a plan, and then we meet with you monthly and hold you accountable to make sure you're doing the things that we suggest. And there's been numerous folks that have gone through financial coaching and have been able to buy a
Mhm.
home. The other thing that we do is for folks that don't have credit, we also have credit builder loans on our retail side that we're able to set people up in, and then it helps to establish credit and to build a better credit score. So if you do come to us, we're going to give you what we call an action plan. If you
Okay.
come to me and I say, okay, well, you can't qualify right now, let me tell you what we need to do. We're going to give you an action plan, and then not only we're going to give you the action plan, we're going to make sure that we're there to follow up with you.
You are really holding hands. So this isn't like, is this first time buyer? It's like you have to have never owned a property before. This is anyone that has need for those
This
services?
this is anyone that has need for our services. Yes. Yes.
Okay.
It could be if you're looking, and not even just for home ownership, but maybe you've got someone who's wanting to buy that first car,
Mhm.
and they need to
Yeah,
establish credit. Maybe that could be the goal. Maybe your goal is to save some money. Then
right.
that's what we want to be there to help you with.
I love that because sometimes a barrier for some of us, in terms of our communities, Black and Brown communities, a challenge or a hurdle to employment or, good employment could be transportation.
That's right.
So, like you said, so you were saying credit building loans to get them there, but you're helping them to get to that first car so they can get their career established.
That's exactly
How does
right.
that translate?
That's
See, I
exactly
love
right.
so
And,
talk the I'm sorry,
and
I didn't
folks
mean to
don't
cut
even
you off.
understand that their insurance rates are based on credit, right?
Mhm.
So
Oh, that is right.
yeah, they do take a look at some sort of credit that they pull. And so if you've got poor credit, you may want to, clean it up a bit to be able to get cheaper rates. I think people with credit challenges, they pay more in general for everything. So
Mhm.
our goal is to help them move that needle and move into a financial situation where they're getting the best insurance rates, whatever they're the best car loan rates, whatever it may be, they're getting the best of
Right.
the best.
Talk about thriving, just really best case scenario all around. Because you would think with insurance rates, it's based on my behaviors. I
Yeah,
haven't had a ticket. I haven't had any wrecks. I'm a good driver. Why is my insurance so high? Well, like you were saying, I guess they see you as a risk.
that's
Period.
exactly right. That's
For
exactly right.
credit, regardless of what it is, you're seen as a risk. So you're always going to pay
Pay
more.
higher premiums. That's right. That's
But
right.
I can come to self-help, have a financial coach that I meet with on a monthly basis for free to create me an action plan.
Absolutely. Absolutely.
I'm just gonna
Whatever
say.
your goal is, we're here to help you reach that goal.
Now, is there a time frame that's like, okay, LaRonda, I need you to, it's time for you to go, honey. We've been meeting for too long.
So I think whenever our financial coaches sit down with people, they talk about like what their goal is and what the time frame
Mhm.
is.
Okay.
Um, and with us holding them accountable, they should be able to meet that goal, right? Now, if we have
Mhm.
someone that comes and they're like, you know what, I don't want to do this anymore, then of course they can, stop the sessions and be done with us.
Mhm.
But our goal is to encourage them to continue. Um,
Right.
so the financial coach, they work with them. I guess we will work with them as long as they need our help.
Mhm, and do the work. I'm gonna say
Yeah,
it, and do the work
yeah,
because, I mean, you are setting the stage for, just for any person to level up, whatever that may be. If we create an action plan, I can meet with you monthly, I can check in on you, I can do all the things, but if you're not implementing the plan,
that's
then
right.
there's nothing that we can do.
That's
It's
right.
implementation.
That's right.
I
We
love
don't
that so much.
we want it. We don't want to want it more than you. You have to want it for yourself and be willing to make the sacrifices
Mhm.
to get to where you want to be.
As they say it again for the people in the back.
You gotta be willing, whether willing to make sacrifices, you gotta be willing to make the sacrifices.
Yeah, and you can't we
We
can't
can't want
want
it
it more than
more
you
than
do.
you. That's right. We cannot
Yeah,
want it more
we
than
can't
you.
want it more than you do.
That's
Because 'cause
right.
I'm gonna tell you, I love I have sold houses, different levels, people coming with different histories, but there's something special about getting someone in a home and it's their first time,
Absolutely.
or they've experienced, traumas or transitions in their life and they're bouncing back. There's something about the joy of them getting there, but regardless of what your story is, we can't want it more, like you said,
That's
more
right.
than you do.
That's right. That's right. And
Wow.
the one thing that we pride ourselves on is just being there. You mentioned hand holding.
Mhm.
Our borrowers require a lot of hand holding, and we are
That's
okay with
good.
that. I
Okay.
mean, we're the type of loans that we're doing. So we have our own portfolio loans where we
Mhm.
are um, creating the guidelines. We're able to make exceptions as needed. Um,
Mhm.
and so therefore, we can be a little bit more flexible. We're not just putting your loan into an automated underwriting system, and the automated underwriting system is saying, yes, this loan is approved, or no, this loan is not approved. Our underwriters, LaRonda, are actually real people. Like our underwriting manager sits in Durham, in our headquarters office, and I can go to him at any time if I need something. But we pride ourselves in being able to look at the borrower story, listen
Mhm.
to their explanation, and then make exceptions as needed or be able to figure things out. We're always asking, well, what's the story behind that? You paid that account
Yeah.
late in October. Why did you have that late payment? And you'll
Mhm.
be surprised when you ask for explanations. People will come up with, well, I had COVID and I was out of work for a couple weeks. Had it been like through an
Mhm.
automated underwriting system, that loan may have automatically been denied. But at self
Right.
help, we're asking the questions. Well, what happened? And so we're able to say, okay, well that makes sense. We can let that one go.
Because
So
people have stories.
Yeah,
They
they
have stories,
do.
and people aren't just out here not paying, not doing, just for because some of these people come in and they have true stories. So it's nice to be able to sit down with a human being and not have to hope and pray you get through an algorithm, but you're actually talking to someone and
That's
sharing your
right.
story.
That's right. I was talking to my loan officer today. We have a customer that's inquiring out of Virginia, and the loan officer was asking. They've got fairly low credit score, so Ron was asking about the rental history,
Mhm.
and the customer didn't want to respond to her, and so the customer called her later and says, I was so embarrassed. I did not want to tell you. She said she was living with family.
Mhm.
So when she called Ron and she says, I want to be honest with you. Me and my family are living in a motel and we pay $400 a week in rent to the hotel.
Mhm.
And so the loan officer was like, wow, like now I really do want to help you. Here you are, you're still working, you're still trying
Mhm.
to survive, you're still taking care of your family, your kids are in school, you're living in a hotel. That's not the traditional rental history that a lender would
Right.
normally want to see, but it's
But
her
it's
rental
rent.
history.
Right,
That's
it's rent.
it's her rental history. So this may be
Mhm.
a case that we might be able to use those rent receipts or payments to the motel to to count as
Mhm.
the rental history. So that's where again you got to listen to the story and ask questions and
Mhm.
be receptive to whatever the customer comes back with, right?
Yeah.
Not
Yeah.
judge.
Right. And that again, that non-traditional credit history,
That's right.
and that's not gonna fit anybody's algorithm.
That's
It's just
exactly
not.
right. I'll let you know
So
how it goes. When we finally get her processed, I'll let you know how it
yeah.
goes, how it ends up.
Yes, that's gonna be a celebration right
It will
there.
be. It will be.
It really will. So I've gone through financial counseling and I've done all of this, but I still need to save money because don't I need to put 20% down on my loan?
Yeah, well, no, you don't need 20%. That is a myth. That is a myth. Now you gotta have some
Really?
money. Some so you gotta have some money, some
Yeah.
skin in the game. And
Uh-huh.
going into homeownership, you do want to have some money in
Right.
the deal. And you know better, upfront fees, earnest money, due diligence.
Mhm.
That's how money that
Mhm.
you have to have up front. You got to pay for appraisal, any inspections that you may have. So you're going to need some money, right? But
Right.
what we found is that one of the biggest barriers to home ownership is just folks being able to come up with the cash to be able to buy a home, the
Mhm.
initial cash deposit.
Mhm.
And so what self help did is we created what we call our equity boost program.
Okay.
And basically, what that does is it allows a borrower to finance 100% of the loan amount and roll in up to 5% of the closing costs into the loan. So the maximum loan to value, the maximum that we can do on a house is 105% LTV.
What?
Borrower
Mhm.
still needs 1%. Now that's awesome, but borrower still needs at least 1%
Yeah.
of their own investment because that shows that you've got some interest in the home. And usually that 1%, LaRonda, comes in through earnest money, due
Mhm.
diligence, and appraisal fees
Right. On the front end.
on the front
Because
end.
nowadays, once upon a time, you could just go under contract and then go to closing, but now you're gonna pay that due diligence and that earnest money up front.
Yes, yes, yes. So
Yeah.
doing that, and then with the Equity Boost program, so there's a couple
Mhm.
ways to qualify. We
Okay.
target first generation buyers, right?
Mhm.
And so a lot of the down payment assistance programs are out there are income based. Usually they're around 80%, so 80% area median income for whatever your family size is. We've got a couple programs. We've got one that targets families that are 80% or below. And then our
Mhm.
first generation program actually goes up to 120%, which allows more income per household. You only have to be a first generation buyer. And what does that mean? You have to be a first time home
Mhm.
buyer, which means you can't have owned a home within the last 3 years.
Mhm.
And your parents cannot currently own a home.
Okay.
And so with that, you're able to get this additional subsidy that helps to buy your interest rate down. And then it allows us to take more risk and lend to you at a
Mhm.
higher loan
Mhm.
amount.
And that's not unheard of. I had a conversation with a young lady via LinkedIn. I had posted something, was talking about home ownership, and she let me know that she does not know anyone that owns. Everybody rents. So
Yeah.
the idea of a first generation home buyer is not unheard of.
Yeah. No, we see a lot of folks, and some of our customers that we help are older. I mean, you would be surprised of the older people that are coming through, in their 60s that are buying a home for the first time. And it's because they've
Mhm.
never had the opportunity.
Right.
And so they would be, and their parents didn't own a home. So this is really
Mhm.
about creating this generational wealth that can be passed down. A lot of our brown and black families
Mhm.
haven't had the opportunity to own before. And so
Mhm.
we're seeing, older families now purchasing their first home, which is absolutely amazing.
That's why I love this conversation tonight because it's getting information out. Sometimes an opportunity to own is just having access to information
That's right.
and feeling and being empowered to take those steps.
Hmm.
Because again, they just what you just don't know, and you live in a don't know, not realizing that this is
That's
something
right.
that you could have had, whether years ago or months ago, is something that you can make happen.
That's right. And everybody's situation is different. And, again, if you come to self help and, it may not be right now, but
Mhm.
with that action plan, it can definitely be a little bit later if you're willing to put in the work.
Just holistic in your services.
That's right.
That's beautiful. I think I'm trying to throw a whole bunch into 45 minutes. It's like, have I covered all my bases? So you've got the equity boost program, but you also do the traditional loan programs, correct?
Absolutely. So even if you're not first gen or if you're not a first time home buyer, we do regular loan programs
Okay.
up to 100% financing still.
Mm-hmm.
The one thing that's unique about self help, LaRonda, is that our loans, because they're portfolio, we don't have the PMI on it. So you're not
Mm-hmm.
paying the private mortgage
I was
insurance,
gonna say,
private
okay.
mortgage insurance, which is insurance that protects the lender if you were to default on the loan, right? So
Mm-hmm.
if you, for some reason, went through foreclosure, the lender would essentially file an insurance claim and they would be covered for that loan. Our
Right.
loans don't have PMI on them. So that's why we're able to maintain them um, on our books. All the
Mm-hmm.
servicing is done in-house. And that's why we're also able to be a little bit more flexible in terms of our underwriting guidelines.
Right.
So sometimes you have folks come because they're somewhat knowledgeable and they'll be like, well, does
Mm-hmm.
it have PMI? And then, we have to go into that, but at least they've done their research and know the
Right.
difference between a loan with PMI and without PMI.
Right. So I know you are on social media like I am, and I know you've seen some things out there. Has there been anything recently that just made you cringe? Just like, oh, don't tell people that.
Um,
Or don't believe that.
let's see, what have I seen recently? Let me think about that. Um, ah, student loan debt.
Mm-hmm.
Student loan debt, right? So um, folks are saying that if you have student loan debt, you cannot buy a home. That is not true. That is absolutely not true. So,
What?
yes, you have student loan debt, but if you are on an IBR, an income based repayment plan,
Mm-hmm.
we can accept whatever that payment is. So, if you're out here with $100,000 in student loans and your income based repayment plan says your payment is $25 a month, then we're going to
Mm-hmm.
use that $25 a month and include that in your debt to income ratios. In the past, lenders have had to use like 1%, or they've had to calculate their own payment. So some
Mm-hmm.
lenders will use 1%, other lenders may use a 0.5%. Either
Mm-hmm.
way about it, the payment that they would calculate would be higher
Right.
than the payment on an IBR. So if you have student loans, you can purchase a home. You just need to be on that income based
Mhm.
repayment plan. There are lots of folks out here that are on the student loan forgiveness program, where if they're
Mhm.
working for a public service
Yeah, our
um,
teachers and
teacher, yeah,
healthcare and
they can have
mhm.
their loans forgiven. So there are ways for you to purchase home. Do not let people tell you that if you have student loans you cannot buy a home. That is not true.
Thank you for bringing that up. I totally forgot about that.
Yeah, yeah,
I wasn't even thinking about it. So, if you are a person, you don't have to raise your hand or say anything. I feel like I'm in class or something, but, they're out there and you haven't been able to pay and you're trying to get your things together, you want to, get these back in the green, get that payment plan in place because when you do the search, you guys find everything.
that's
Even
right.
if you did something way back when and you forgot about it, you're gonna see it.
That's right. So it's what we call public records.
Mhm.
So yeah,
Yeah.
if there's anything out there that's, that's bad, that's hit your
Mhm.
public records, then we will be able to see it. So go ahead and get those things taken care of now. Get your
So
student
what
loans if they're in default. Go ahead and bring them out of default.
get that plan in
Get
place.
that plan in place, and it's not as bad as what it could be. So
Right.
don't be afraid to ask the questions and to start the process.
Because if they're in default, we're gonna see they're in default. That's
Yep,
a ding.
that's a
And
ding.
then it's like, okay, you're gonna have to start paying that back, and they're gonna go by that 1% in terms of estimating what your payment would be
That's
based
right.
on how much you owe.
That's right.
Oh, what if I have a business? Because we're in the world of side hustles and
Oh,
multiple streams of income. What if I
oh,
have a business?
oh, LaRonda. What a wonderful question. Um, Self-employed income, 1099
Mhm,
income needs to be reported on your tax returns. You need to file a
mhm,
1040 with the Schedule C. Now, what we see a lot of people doing is they come in and they say, "Oh, I earned, 80,000 for the year." But
mhm.
then when we look at the tax returns, yes, they had $80,000 in sales and gross sales, but then they wrote off 50,000 in expenses. And of course, this is being recorded. I don't want to say anything out of that's the right thing to do. But if you're looking at purchasing a home, you may want to
Yeah,
go ahead and show your real income because
mhm,
lenders are going to look at that net income, most lenders, in order to
mhm,
qualify you for a mortgage loan. Now, I do
mhm.
know that there are some lenders out there that can do like bank statement loans and things like that. So there are
Right.
programs available, but you may have to put more money down or the interest rate may be a little bit higher. So as soon as we see self-employed borrowers, the first thing we do is, tell them, for the next 2 years, if your goal is home ownership, to go
Mhm,
ahead and show what your real income is. It's going to
mhm.
hurt initially, but it's going to help in the long run because you'll have enough income to be able to buy the home that you're wanting.
Right. Now, I'm not gonna pretend to be a lender and accounting and all that, but if you brought in 80, you're writing off 50, you're only showing 30.
That's
So,
30,000.
yeah, 30,000, and it's like, okay, what can I qualify for that if I had no debt? But then if you have debt, then your debt to income just whoop
It just went out the roof. And
out
our
the
debt
roof.
to income ratio is 50%. But if you're showing $30,000 worth of income and your monthly, that would be $2,500 a month, then your
Mhm.
maximum house payment plus everything else that you have is going to be about what, $1,300 total?
Yeah,
It's not going to
ooh,
be very much. It's not going to get you the home
right.
that you want.
It's not. But you can put all that in place and prepare yourself by sitting down with a financial coach and putting that action plan.
Yes,
If you've done
truly.
it, if you've done it, okay, you've done it. Let's start from now and get yourself ready. Get yourself home buyer ready.
Yeah, don't be afraid. Start now, ask questions, do your research, you know, call you because as a
Mhm.
realtor, you guys, y'all know what's out there. Y'all know what
Yeah.
programs lenders are offering, so you can direct
Mhm.
people.
Right.
So yeah, don't be afraid to
Yeah.
start the process.
Absolutely. And let me say this too. So if we send someone to you, do you go telling all their business, letting us
No.
know what they're spending on this and that? Because people think about it. They're like, I don't want you knowing my business.
Yeah, no, 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 no. We do not want to go to jail for sharing information, for private information. We do not share information with realtors. If you want us to share information with your realtor, with LaRonda, then of
Mhm.
course you can say, yeah, go ahead and share this with her. But otherwise, no, everything that you do with us is going to be
Okay.
strictly confidential.
So it is. It's like going to a therapist or anything like that. There is that client
Absolutely.
confidentiality, but I just had to put it out there because people do. That's a part of it, especially working with people that they know. It's like, I don't want her knowing all of my
Yeah,
business.
no.
So I wanted to ask that question. Well, let me ask you this: how do people, if I want to have a conversation with you or someone at Self Help, or start the process, how can people get in touch with you? What should be their first step?
So I would love for people to call me.
Okay.
Um, I could give my number 919-956-4489. You can email me, Shondra at self-help.org, to get the process started. I love talking to potential clients. I love working with them. That's one of the reasons why I've stayed at Self Help so long. Even though I'm in the management role, my
Mhm.
joy comes from working with actual borrowers. So whenever, if you refer somebody to me, LaRonda, I'm going to work directly with them. I'm not going to refer them to one of our loan officers.
Good.
So, this is a case of where if anybody reaches out to me as a result of this presentation, then you're
Mhm.
going to be working with me. And you in me, you get a previous underwriter. I was an underwriter. I was a mortgage loan officer. I was a trainer. So I've done a little bit of everything. And so, I will definitely give you the good service that you deserve and the hand holding and the encouragement
Mhm.
that you need. So,
And you're
yes,
a real person right here in the triangle. It's not
I
that
am a
person that
real,
behind the computer.
I am right there at 301 West Main Street in downtown Durham. I respond to email, I respond to text messages, voicemail, whatever you do, you can reach me and I will get back with you.
And what was that number again? 919
956
956
4489.
4489.
Yep.
Gotcha. I've got a new toy. Watch this. Oh, let me see if I can
I
make
can
it
see
show.
it.
There it goes. Look at that.
Ah, look at that. That's fancy, girl.
I got
I
a new
love it.
toy.
Oh, that is so awesome. And LaRonda, girl, you are top notch in everything that you do. I love it.
Thank you so much. Look, I'm playing around with a new platform and it's got all these little bells and whistles. As they say, I geek out when it comes to little toys and stuff.
Oh
So
my
I'm excited. So I
gosh.
was like, wait a minute. I can put her number and let it go across the screen.
That is amazing. I love it.
All right. Okay. I'm back, y'all. I'm sorry. I'm back. Okay. So there is her information. And like I said, she's a real person right here in the area. So you can talk with her live on the phone. You can sit down and have a conversation with her. And she's very active in the community because, again, that's how I met her in terms of working in the community, sharing and empowering folks when it comes to purchasing and just a lot of other aspects in their day to day. So, thank you so much
LaRonda,
for
thank you.
joining me for this session. I knew it would be amazing, so I thank you so
Oh,
much.
you're so kind. Thank you so much, LaRonda. And I hope that all the folks that are out there, please, 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 if you don't know where to start, if you're afraid to start, it's okay. Call me. Call me. I can get you started. I can put you on the right track. Whatever you need, we are here to serve. Self Help Credit Union. We've been in the community for over 40 years, and we want to make sure we've got this money. We want to get it
Mhm.
out. And so we want to get it out to folks like your viewers and the communities that we serve. So please, please, please give me a call.
That was perfect. I was going to ask you, do you have any words for him before we go? So that was fantastic. And if you feel like you are ready and you want to better understand the home buying process, or you want someone to advocate for you and be with you on this home buying journey, my contact information is on the screen now. And I'll just say, Shondra is just an example. I call them my tribe. Shonda is an example of the people that I have in my circle that are passionate about what we do in terms of helping people create generational wealth through real property ownership. And we can help you achieve those goals, whether it's your first time buying or you're rebounding and you're buying again. Let's start a conversation. Just ask the questions, and we are here to help you succeed. So, thank you again, Shondra. I
Thank
love
you.
talking with you this evening.
Thank you for having me.
All right, you guys have a great evening. And again, we're here every Thursday at 7 o'clock with a new topic because it's about bringing you information so that you can thrive and not just survive. Have a great evening.